I'm joined now by Bob Parker, Senior Advisor at Credit Suisse. Bob, thank you so much for coming in. Now, we have so much to talk about in terms of market sentiment, but first of all, I just wanted to get a quick reaction on gas, because we just had figures from Iberdrola,
right.
And you say one of your calls is actually go long on gas.
Well, I think if you look back over the last 12 months, natural gas has been the worst performing commodity. If you look at the next 12 months, I think there is going to be a very significant increase in demand for natural gas. Two factors. First factor is obviously the slowdown in investment in nuclear power, and I think to some extent that is going to be met by increased demand for gas. Second factor is obviously the relationship between oil prices and gas prices, and whereas a year ago the two were broadly in balance, I would argue now we've got a situation where oil is expensive, gas is cheap.
Yeah, interesting comments, because we just found out again that Iberdrola actually beat estimates. Bob, what do you make of the market sentiment in general? Because you were telling me you think the markets are confused. There is so much to think about. Oil, there's still the Middle East. There's, of course, inflation and concerns of this peripheral Europe here.
Well, there are a whole series of uncertain factors at the moment, and you've listed most of them. I think if one just breaks it down by asset class, first of all, if you look at the foreign exchange markets, sentiment remains very negative towards the US dollar. And with one or two minor exceptions, the US dollar over the last 12 months has weakened against every currency in the world. I don't see any catalyst that's going to turn around sentiment on the US dollar, although the euro is very...
QE3, would that give the impression?
First of all, I don't think we're going to have QE3. Right. I think, however, QE2 will stop at the end of June, but the pace of it being unwound will be very slow indeed. So liquidity in dollars will remain very broad across markets well into 2012. So there are no immediate obvious catalysts for turning the dollar around. So I think negative sentiment there persists, particularly in an environment where the ECB will continue to raise rates.
And the UK won't.
And the UK won't, and I think inevitably that means some further softness in sterling against the euro. And if one looks at equity markets, it's quite interesting at the moment. If you look at surveys of investor positions, recently it was very obvious that investors were long credit markets, they were long commodity markets, but we have not seen strong investor flows into equities. Now, although inevitably there is going to be some slowdown over the next 6 months in earnings per share, there is going to be some pressure on profit margins. Almost by default, equities will outperform because other asset classes are frankly unattractive.
But Bob, do you believe that actually the situation we're seeing now is abnormal? And what is it going to take to stabilize the situation? Are we still risking a double-dip recession?
I think the probability of double-dip recession across the world is very low. I do think in the over-leveraged countries, notably America, Japan, and obviously the pace of reconstruction is a huge issue there. I think there is a risk that investors may be disappointed about the pace of recovery in Japan. The other over-leveraged country is obviously the UK. In those over-leveraged countries, I think we're going to go through a period of not recession, but actually very low growth.
Bob, thank you. Bob Parker there.